You know, in the world of accounting, numbers are supposed to tell the truth. But what if they don't? Today, we're not just going to be accountants, we're going to be detectives. Our mission? To hunt down those sneaky little errors that can hide right under our noses, even in a perfectly balanced set of books.
It's the golden rule, isn't it? For every debit, there has to be an equal credit. It's the first thing you learn. So that means the books should always be in perfect harmony. But what if that perfect balance is just an illusion? What if it's the perfect cover-up?
Every good detective needs a trusty tool, right? For an accountant, that tool is the trial balance. Think of it as the first big checkpoint in any financial investigation. It's basically a list of all your accounts and their balances, and its main job is to check one thing. Does the basic math add up?
And here's what it looks like out in the wild. See? You've got all your accounts listed out, cash, sales, whatever, and their final balance sits in either the debit or the credit column. The whole game is to get those grand totals at the bottom to match perfectly. When they do, there's this huge sigh of relief. But as we're about to find out, maybe you shouldn't relax just yet. So why do we even bother with this? What's its mission? Well, it's got three really critical jobs. First, like we said, it's a math check. Second, it's our #1 clue when things don't add up. And third, it's the solid ground you build your final financial statements on. You know, the official story of the business.
All right, tool in hand, it's time to meet our suspects. Welcome to our gallery of errors. We're about to introduce you to the usual culprits that can cause chaos in the books, often without leaving a single trace.
And this, right here, is the big mystery. This is where it gets really interesting. A balanced trial balance feels like a win, but it is no guarantee of accuracy. Your debits can perfectly match your credits, while some major blunders are still hiding in there. How is that even possible? Well, it's time to meet the crafty culprits responsible.
First up in our lineup, we have the ghost, the error of omission. This is when a transaction is just forgotten. And here's its clever trick. If you forget the entire transaction, both the debit and the credit, then of course the trial balance will still balance. It's like it never even happened. The books have no idea it ever existed.
Next, we have the error of commission. This is your classic clerical mistake, a simple slip-up. For example, you record the right amount of money, but you put it into the wrong person's account. Or maybe you post to the right account, but you type 500 rupees when you meant to type 5,000. It's an honest mistake, but it can really mess up the story your numbers are telling.
Now, this suspect is a bit more of a mastermind, the error of principle. This is when a fundamental rule of accounting gets broken. So, let's say you buy some new machinery for the company. That's an asset, a capital expenditure. But what if someone messes up and records it as just a simple repairs expense? The numbers will still balance, but you've just completely misrepresented the company's financial health.
And finally, our luckiest or maybe unluckiest suspect, the compensating error. This is when two completely separate mistakes happen, and by sheer coincidence, they cancel each other out perfectly. Imagine you overstate one account by 1,000 rupees, and in a totally different transaction, you understate another account by the exact same amount. The net effect? Zero. The trial balance stays balanced and both errors stay hidden.
Okay, so let's break this down. We can basically divide our suspects into two gangs. You've got the stealthy ones, like a complete omission or an error of principle. These guys are like ghosts in the machine. They don't set off any alarms. But then you have the noisy ones, like calculation mistakes or forgetting just one side of an entry. These guys immediately trigger the alarm by throwing the totals off balance.
Okay, the alarm is ringing. The trial balance is officially out of whack. So, what happens now? Well, it's time to put on that detective hat and start the real investigation. This is that moment every accountant dreads. The columns don't match, and the mistake could be anywhere. It feels like looking for a needle in a haystack, right? But accountants don't panic. They have a system. And this is the playbook for that hunt. You don't just dive in randomly. You start broad. Just re-add the columns. You'll be surprised how often it's just a simple addition mistake. If that's all good, you start working backwards. Did you copy all the balances correctly? Is the math in each individual account okay? If you still can't find it, you have to trace every posting all the way back to the start. It's a methodical process of elimination.
So you found the error. Great. But you can't just take a whitener to it. There are professional procedures for correcting the record and making sure the story is set straight. Let's look at the tools for the job.
Accountants have this really clever trick up their sleeve for when they're on a tight deadline. It's called a suspense account. So imagine your trial balance is off by 5,000 rupees. You can't find the error and your report is due tomorrow. You can park that difference in this temporary account. It's like a placeholder. It makes the books balance for now so you can get your statements done while the hunt continues.
Once you've found the culprit, the formal process of fixing it is called rectification. This means you make a new official journal entry that corrects the original mistake. You don't just erase the old one. This is super important because it creates a clear audit trail showing exactly what went wrong and, more importantly, how you fixed it.
So, after this whole detective journey, from that first check all the way to the final correction, what's the big lesson here? What's the one thing you should really take away from all of this?
It all boils down to this one single idea. A trial balance proves the math, but it does not prove the truth. It confirms that your debits equal your credits, sure, but it can't tell you if the numbers are in the right places, or if entire transactions are missing, or if you've broken the rules. It just checks the calculation, not the context.
At the end of the day, accounting isn't just about balancing numbers. It's about telling the true financial story of a business. So the question I want to leave you with is this. The next time you see a set of financial statements, don't just ask if they balance. Ask yourself, what story are these numbers really trying to tell? Thanks so much for tuning in.